Okay, you guys can start.
Okay, everybody ready? Okay, let's go. I hope everyone had your breakfast already. Okay, I hope everyone had your breakfast. It seems a while I done my last presentation, so I'll try to keep my presentation engaging and not to be so boring. Okay, so I won't be introducing my members because we are classmates. They will introduce themselves later. So I'm Ryan, and today I'm going to talk about the impacts of fintech on businesses. Alright, next slide. So fintech refers to financial technology. Alright, so next slide. So there are 60 of 96 consumers across the globe are aware of at least one alternative fintech product or services. Okay, next slide. So let me ask you guys, let me ask everyone, do you use fintech in your daily life? No? Why not? Don't know how to use. Okay, so next slide. So this is the reason why we should understand fintech today, because many of the people does not know financial technology and their application and their implication and their definition. So next slide. Okay, so fintech, most of us use it every day. Okay, we use it every day, such as touch and go, online banking, and etc. So when you go to a restaurant, you oftenly pay cashless, right? This is fintech. Okay, this is fintech. So fintech is not only useful for consumers, it also useful in businesses because it can increase productivity, reduce operational costs and risk, and reduce transactional risk. All right. So next slide. So today we are going to talk about fintech because we, as a computer science students, we often being tasked to do various kind of softwares to fulfill different kind of industries. So fintech is one of the fastest growers technology internationally. So I would like to share the knowledge that I know about financial technology to everyone here. Okay, so next slide. So increasing productivity with fintech in businesses. Next slide. So these are the processes in the financial department that can be automated. So I would like to rephrase again. Fintech is not an individual software. It's the use of technology in delivering and automating financial services. Okay. Okay. So previous slide. Previous slide, please. Previous slide. Previous. Yes. There are 11 kinds of processes commonly being automated in the financial industry. So, except for the business development, which cannot be replaced by any technology, other than that, there is a possibility that technology can 100% automate the processes. Okay, we can refer to this graph. Next slide, please. There is a short video that showing how can we use artificial intelligence to analyze the document. Okay, next slide, please. Okay, these are the common companies in Malaysia that are providing financial services through technology. Next slide, please. Okay, this is the UOB Tomorrow app that shows how can we track our financial transactions between various kinds of merchants and analysis that provides based on your spending. This can improve your decision making in businesses, especially when businesses employees tends to have many claim forms, and the business can track where does the money goes out to and make better decisions in providing benefits to the employees. Okay, next slide, please. Okay, that's all from me. So now I'll pass to Kelvin to speak on his part. Thank you.
Okay, thanks Brian to giving the presentation to me. My name is Wei Xian. Now I'll just explain how Fintech can be reducing the cost and risk in the businesses. Next slide, please. So the first point is the know your customer, essential form KYC. KYC is a thing that mandatory processing to identifying and verifying the user when they are opening the account at priority time. Example, KYC can identify the users by using the fingerprint or Face ID. As one in other states, Fintech can as one in other states, eventually such big data and blockchain can efficiently analyze and resolve the risk. We ensure the users to reduce the transaction risk. What happens if that two accounts have the same name? Two bank account have the same name, so that KYC can duplicate the to make sure that bank account can identify the two bank accounts have the same name in
communication skill.
Sorry?
Is it communication skill?
Yeah.
So next slide, please. This is an ad frequency used in Malaysia. That is Touch and Go e-wallet. I will use this as an example. Okay, Touch and Go e-wallet is first. They will ask the users to select the ID type, either is Malaysia or foreigner. After that, they will ask the user to take their front and back identification card photo, and then they will start to ask the user to scan their face to ensure that their face is sent with the identification card, so that they will know the transaction is backed by the account owner. Next, please. The second point is the lower transaction fee. For the traditional service industry, they will often charge higher transaction fee compared to the fintech. For example, service is foreign current exchange, merchant purchase, and fund transfer. As McKinsey states that traditional industry service might be offered cheaper. Fintech might be offered cheaper transaction fee compared to the traditional financial service. Therefore, for example, when you go to the foreign currency exchange counter, it might cost higher a bit the exchange rate. But for fintech, when we use the Visa card, it might cost a lower transaction rate compared to the counter service. Also, then when we go to the counter service to exchange the foreign currency, it might have the counter may hand us the cash, so that might increase the risk when we holding the cash. That's all for my presentation. I will pass the presentation to Tachana. He will explain the how fintech can reduce the risk in business, transaction risk in business.
Thank you, Kelvin. I'm going to be explaining my part how the transaction fees can be reduced using fintech. Next slide, please. Yeah. Basically, summarized down to 5 points. Mainly, the first point being fintech can create new business opportunities for startups using technologies like AI, ML, machine learning, and other technologies that are modernizing as we go. And they serve towards SME businesses, small medium enterprises. And the second point is credit assessment, fraud detection, risk evaluation, and forecasting. Obviously, with the growth of AI can detect any abnormalities or any fraud activities or any let's say abnormal payments that come through, and it will send us a signal saying there's something wrong with this, have a look at it. And the third point is internet-based financing. That's a point because instead of using your own money, you're using other people's money. I'm not condoning this, but it's still not stable yet. But at the point at how it is right now, there's certain such as P2P lending, crowdfunding, and there's another one. We'll see that. And as the fintech improves day on day, many businesses would want to switch over rather than the traditional banking, depend on the traditional bank. They depend on fintech more due to the convenience and transparency. Basically, speed, flexibility, simplicity. It speeds up the process much faster. And transparency being you get to see your transactions more clearer, and it generates a more transparent accounts. Now these are the points to how fintech can reduce transactional fees. First being secure payment systems. Secure payments involves two main points: encryption and tokenization. These are the technologies payments use today. I will explain encryption and tokenization at the end. Second being fraud detection and prevention, with using AI and machine learning to detect and learn abnormalities within payments or any accounts. And improve transparency, I already explained just now. And access to alternative financing, which is P2P lending, crowdfunding, invoice financing. P2P lending means you don't go towards a bank, rather you go towards a person who already has money and you deal directly with the lender, not as in a loan shark, as in an investor. Crowdfunding is basically when you go online and you find sites with people willing to invest money in your company. It's still not stable at the moment, but still it will improve day ongoing. And invoice financing is basically when you have an invoice in your hand and you go to a financier and they finance the invoice for you. You sell your product and pay back to the financier. So there's no banking involved, or you don't use your own money in this situation. You use other people's money. And the last being smart contracts and blockchain technology. Smart contracts are basically technology where you set requirements, and once you hit those requirements, it will execute the contract. If this wasn't in place, you may breach your contract or at the end terminate. For example, and for blockchain is basically a ledger which controls all your accounts, and basically not many people has access to it except for you, which enhances the transparency and prevents fraud. Back to the encryption and tokenization. Encryption and tokenization are almost a similar thing, just that encryption is something, it converts human readable data and scrambles it. You put in your token and it unscrambles back for you into human readable data. Tokenization, on the other hand, it stores on the cloud. It doesn't store below. So, and once you pass your key in, only one person can have that key. It's, for example, like the 12-word key. Once you enter that in, then only it brings the data back down. Then only you're able to access it. That is all for my part. I would like to pass back to Calvin for conclusion.
So now you should know how fintech can improve businesses' operations by increasing productivity, reducing operational costs, and reducing transactional risk and transactional risk. Okay, so the closing. So what is financial technology? Can I have you to answer? Yeah.
Financial technology, I think there are many things like blockchain and deep tokenization, and so those are some technologies. And you basically you don't need your own money. You use it from another person, a lender. So yeah, that's what I understood.
Okay, the financial technology is a very broad topic. So it consists of A, B, C, D. We can search the internet about it, but it means that artificial intelligence, blockchain, the C, encryption, and data, D. So these all four components are the financial technology components. So financial technology means how can we use technology to automate and deliver financial services. So that's all for our presentation. Okay, thank you.